With the world's biggest second economy, China are about to turn on the money printers in a serious way. Its rise to wealth and power is nothing short of spectacular. This massive economic train has been fueled, of course, by rapid industrialization on mainland China, massive urbanization, and a significant increase in consumer demand. Low cost of production in China had made the country the world's factory. Everything is made in China, as you've probably noticed. The export-driven economy has undoubtedly played a very big role in the country's rise to power. According to the World Bank, the country's GDP growth has averaged over 9% per year. However, the Chinese economic engine is starting to lose a bit of steam. There's been a bit of an economic crisis. Doom and gloom are hanging over the Asian market right now because of some disappointing data that has been coming out. Retail sales and new home prices in China have also weakened significantly. Globally, with a higher unemployment rate, consumers will have less money to spend on goods, which becomes a cyclical problem. Chinese stocks have dropped to the lowest level in 5.5 years. The CSI 300, which is the Chinese equivalent of the US S&P 500, has declined over 14% since May and is down almost 50% since 2020. And just to put the icing on the cake here to all of these negative factors, China's population, 1.4 billion, is also facing a major crisis. The population is in decline. Falling population will have several negative impacts on any economy because with fewer people entering into the workforce, there is a chance, of course, of having a labour market shortage, which can hinder growth. As the population declines, the proportion of elderly people increases. Fewer kids, more old people. This puts all kinds of strains on public resources like the healthcare system. However, I don't think any government or central bank would allow the economy just to succumb to a free fall without trying to do something. China is no exception. If they want to save their economy, economists are currently calling for an unprecedented $1.4 trillion stimulus package to revive China's falling economy. When and if China turns on the money printers, there will simply be more money circulating out there in the global economy. With the increase in monetary supply, more money, of course, gets entered into the system that can be used to expand businesses. To create more jobs, more people have more money. Property prices start coming back up. Big and small investors, they start to look to diversify, of course, into riskier assets.